Hello and welcome back. In this particular lesson, we're going to start studying trading plans. And by the end of this lesson, you will have created your first trading plan that you can take all the information we've learned in the first 5 lessons and compile it together into an executable plan that you can actually use to make money. So let's look at our agenda for this lesson. First, we're going to talk about the components of a trading plan. Then we're going to look at putting the plan together. And finally, we're going to talk about executing the plan. Let's get into our discussion on the components of the trading plan. You know, every trading plan has certain components, and the first thing we need to understand is why we use a trading plan. Trading plans serve a very important purpose. First, it is to help us limit our emotions in the trade. You see, everybody has a tendency towards bias, but once you enter a trade and you actually put money on the line, that emotional bias takes a really heavy turn in the favor of whatever trade you just placed. Obviously, you want to make money and you don't want to lose money. So the balanced, neutral approach that you can take when you don't have money on the line suddenly is skewed once you actually place the trade. The trading plan helps us understand before we get into the trade what we can expect, what we anticipate to do, and if we follow that plan, it will help limit that emotional bias that has a tendency to come up while we're in the middle of the trade. So that's the first reason that we use a trading plan. The next thing you need to understand is the trading plan will help guide us to making the right decisions. You know, once you've got emotional bias in a trade, the right decision oftentimes is, well, frankly, hard to find because we've got so much emotion on the trade. So the trading plan will help put the steps in place that we expect to follow, and it will help guide us towards making the right decisions. And finally, the trading plan will also help us understand what to do when we get into trouble. So these are the primary purposes. You know, there was a once brilliant philosopher, I think they called him Anonymous, who once said that failure to plan is planning to fail. And in the world of trading, no truer words have ever been said. So let's understand the components. At a minimum, every trading plan needs at least 3 components, and they are your entry price, your target, and your stop. If you don't have these 3 components, you don't have any kind of a trading plan, and frankly, you have no business placing any trades. Now, a trading plan can go much further than these 3 pieces of information, but at the very basic minimum, you must have your entry, your target, and your stop. The entry price being the price you expect to get into the trade, the target being the price that you expect to get out of the trade, and your stop being the price that you'll get out of the trade if the trade goes against you. An entry, a target, and a stop. Now, there's additional pieces of information you could also bring into your trading plan. For example, you may have some certain criteria that need to be met before you can get into the trade. And if you've got criteria that need to be met, then that would be something that maybe you put into the trade. For example, you might say, if this stock rises above $101, then I'm going to buy the stock. That would be a criteria that needs to be met before you'll get into the trade. Additional components you might consider would be maybe your overall market conditions. Let's say you're considering a string of bullish trades, but the overall market conditions are looking rather bearish. Well, you might put into your trading plan that I'm only going to place these bullish trades if the overall market conditions suggest overall bullishness. Because after all, it's a lot easier to trade with the general momentum than it is to trade, upstream, if you will. So it's really good to understand the overall market condition, and that's a key component that you could put into a trading plan as well. And then if there's any other information that you'd like to add, maybe you're trading options, you might want to put some specific option information into your trading plan. These are additional components that you could add to your trading plan. But again, the 3 basic components are an entry, a target, and a stop. You must have the entry, the target, and the stop. Now, once you have these key pieces of information, your entry, your target, and your stop, and of course any additional information, well, now you need to write it all down in your journal. Your journal is a personal place. It's somewhere you want to write stuff down and compile it in a way that you like to use it. For some people, they like to use something as simple as notebook paper or maybe a handwritten journal. For other people, they might like to use something a little bit more formal, and for others, maybe they choose to use something electronic. There's really no perfect way to do it. What is important is you create a way that you can document your trades and you can use that information, a place where you can gather your data as a place of keeping your record. It's important that you keep a record of what's going on because you can come back and you can reference that, and then you can use that to improve your trades moving forward. Use use your journal as a reference to improve your trades, and what you're going to find is it's also kind of a historical track of the progress you've been making. Now, if you look in your notebook, you're going to find that there's actually a couple different variations of journals that we've put in there for you. These are all handwritten journals. Some of these are more practical than others maybe. This one that you see on the screen is a very basic journal. And just take a look at this. You know, this is a formation that you could use by printing this sheet off, or you can frankly just do this on a piece of notebook paper. I did something like this for years. So let's say you just want to put your ticker symbol in here. Here's my Amazon ticker symbol, and let's say the date is July 1st. I'm making this up. And let's say our entry price is $300 with maybe a target of $310, and maybe our stop's over here at $295. And so all you've done here is you've written out your basic trading plan, and you say this is what's going to happen, and if the stock goes above $300, I'm going to buy it for a long trade. If the stock trades up to $310, I'm going to sell it. If it drops down to $295, I'm going to sell it to get out of the trade. And that's your basic trading plan right there. And then, of course, each day you can update that. Maybe on 7/2, maybe nothing changes. Maybe you just put a little arrow here and say, it just transfers forward, moving forward. Maybe that's a weekend here. I'm making this up, but let's say that's a weekend, and maybe by the end of the weekend you decided, really 301's a better trigger, and maybe my target's still going to be 310, and my stop will still be 295. And so you can keep adjusting it as you move forward. Now, again, this is a very, very basic trading plan, and it's a very basic type of a journal. Another formation of this, another variation that I like, and this is one that we kind of created a couple years ago. A lot of our students like it, and I've enjoyed working with it, is this particular one that you see on the screen. Let me show you what I like about this one. The first thing I like is you've got a place for both a bullish and a bearish trade. So I like that component because you can have a bracket type of a trade set up in here. The next thing is you see right in the middle you've got your date. So let's say we're doing the July 1st thing, and let's say we put a price in here, and again, I'm making this up, but maybe the stock's at $297, and maybe our entry price is $300, and maybe our target is $310, and our stop is $295. Well, here's what I like about this particular variation. You notice that your entry and your target and your stop go in the order visually that they actually go price-wise. So it kind of lines out nicely with your chart. Visually, you enter here, your target's going to be up here at $310, and your stop's going to be down here about $295. If you look at the bearish trade variation, look at this. So the stock's at $297. Let's say that if the stock drops down below, I'm making this up, but we'll say $290 a share, then our target maybe is $280, and maybe we put our stop at $295. And so again, it's the same idea that we've got now an entry and a target and our stop is above, but what's great about this is it's visually in line with your chart. I really like that component of this particular trading journal. Now, it's a pretty basic journal still in the sense that all it really gives you is your entry, target, and stop. You can come down here to the bottom and make some notes. You can go through the 5 steps of trade confirmation. Yes, I checked my support and resistance. Yes, I did my chart patterns, my candle patterns, my moving averages, my indicators. You can kind of walk through all those components here. But it's a basic journal, and then as you move forward, Tuesday, let's say Tuesday of the week is 7/2, and maybe the stock has moved up to, let's write that a little cleaner there, maybe 298.50, but you still didn't trigger your trade. So you could either rewrite all this, or you could just move it over and say it's the same. And then maybe by Wednesday of that week, maybe the stock is traded up to 299.98, but it still hasn't triggered. And maybe by this point you say, there's none. I don't have anything I want to enter in here, but I'll still move forward my trading plan for a bullish trade. Lots of different ways you could use that. Again, you want to kind of personalize it. But this is one variation of a journal that I have found very useful, and a lot of our students like it. And it is in your notebooks. You can print it off. Now, there's a few other variations of journals in there. I'm not going to go through them, but you're welcome to play with them, and you can feel free to print them and use them as much as you wish to.